Today we'll be talking about fixed income, its importance in the market, its importance in the portfolio, and what you should know about it sitting in Pakistan especially. So initially I think we need to understand what actually fixed income is and what do we mean when we say fixed income securities. These are securities they have a few characteristics. These securities have a predictable cash flow. As the name suggests, they have a fixed rate of return, and they have a definite maturity at which you get your principal and your markup back. So these are one of the main things. It has low volatility, it's sensitive to interest rate. There are a million characteristics, but the main ones are these which I just stated. Why is it important? Who is it for? Is the next big question. See, we need to understand one thing, that when we talk about investor, every investor has a very different luggage that they carry. They require very different things from their investment. We understand that there are long-term investors, high-risk investors who go for equities, and those funds are the best funds or asset class for them. But when we look at the overall pool, we see people who need a certain cash flow, who are not willing to play with their capital. They want a capital preservation for them. They want their risk appetite is not there. They don't have, they are in a certain age where you need to understand that you can't lose all your money and earn it back. So as I was explaining, that every investor has a different need. So this is actually targeting the investors who are more interested in preserving their wealth rather than exponentially growing it. As I said, your capital is preserved, and you always get what you invest, subject to a lot of factors. There are risks associated to fixed income also, but in totality, it's a very predictable and a sure short income which you're going to get end of the day. For investors who actually want to come into fixed income, the portfolios have been very diversified. They're different kind of investors. They're like people who want to invest in Sharia compliant fixed income securities. They want to preserve their capital but still remain in the Sharia section of the funds. Then there are funds who actually cater to clients who are willing to take risks of the asset class, and for them we have like money market funds. They are Sharia compliant money market funds with a little longer or a little higher risk profile, who are looking for returns over a horizon of, let's say, 3 months plus. Can go into the income fund categories, the sovereign fund categories, if they're actually willing to invest for more than 6 months. So in that case, there are aggressive income funds which we have. So there's a different asset class for everyone. Yes, I would like to say that if your investment horizon is more than a year, then I think fixed income won't be that fruitful for you. Then equities is there. Okay, so having said that, this is not the only purpose of fixed income securities. There's another side to it. Even if you are an equity investor, even if you have a diversified growth portfolio, which we call that, and you're targeting a very strong and a very high return, even in those cases, you need anchors in your portfolio to actually stabilize your risk. You can't be all into an equity portfolio. Depending on your risk profile, some people are, but there are a lot of people who want to actually manage the risk, earn more than the inflation, but not take a lot of risk. For those kind of investors, fixed income security works as an anchor for the portfolio. You invest certain portion of your portfolio into fixed income. Let me give you an example. You want capital protection, you want the flavor of equity, and you want to earn money. You invest a certain amount at 10%. Let's say you invest 100 rupees and 10%. You know that you're going to get 10 rupees end of the year. You can invest those 10 rupees in whichever security you want, in the equities. Even if you lose, which you don't, the money is never wiped out. But even if you do lose those 10 rupees, you'll earn it from your fixed income portfolio. So this is how these instruments are used. This is how you manage your portfolio's risk, provide yourself capital protection. So there is a very huge importance of fixed income securities in the market.